Welcome to the Dakota Live podcast. I'm your host, Robert Morier. The goal of this podcast is to help you better know the people behind investment decisions. We introduce you to chief investment officers, manager research professionals, sales leaders, and other important players in the industry who will help you sell in between the lines and better understand the investment sales ecosystem. If you're not familiar with Dakota and their Dakota Live content, please check out dakota.com to learn more about their services. Before we get started, I need to read a brief disclosure. This content is provided for informational purposes and should not be relied upon as recommendations or advice about investing in securities. All investments involve risk and may lose money. Dakota does not guarantee the accuracy of any of the information provided by the speaker who is not affiliated with Dakota. Not a solicitation, testimonial, or an endorsement by Dakota or its affiliates. Nothing herein is intended to indicate approval, support, or recommendation of the investment advisor or its supervised persons by Dakota. Today's episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediary database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakotamarketplace.com today. Well, we are very excited to introduce our audience to Sam McFall. Sam is the managing director of Mill Creek Capital Advisors. Before we hand it over to the desk, let's learn more about Sam. Sam McFall serves as managing director of investments at Mill Creek Capital Advisors. Before joining the team at MCCA, Sam spent 3 years at Pitcairn as a senior research analyst with primary research coverage of liquid alternatives and real asset strategies. Sam has previously held various positions within Delaware Investments, Brinker Capital, and the Bryn Mawr Trust Company. Sam earned his Bachelor of Arts in International Business from Rollins College. He holds the designations of CFA and CAIA. Sam is a member of the CFA Institute, the CFA Society of Philadelphia, and the CAIA Association. Additionally, he chairs the investment committee at St. Paul's Episcopal Church in Chestnut Hill, Pennsylvania, responsible for oversight of the church's endowment portfolio. Let's jump right into this interview with Sam and the team on the Dakota Live call desk.
Sam, we had a little snafu today. You were heading down to opening day. The weather pushed that to Friday. So because of that, you were so kind and generous to stick around. Thank you. And let's just get right to it. Just give us a wellness check. You were on this call 5 years ago or 4 years ago, so it's kind of like the Olympics. Give us an overview of Mill Creek and what's going on from when we spoke before.
Sure, Chris, and thanks for having me on again today. Things have been great at Mill Creek, notwithstanding what's going on in the world around us. But the business is doing well today. Market events have been challenging, obviously, but that's impacting everybody. So today, Mill Creek, we're managing $8.5 to $9 billion. Business hasn't really changed. We're still pursuing ultra high net worth families and the institutional community. I would say there we're largely focused on endowments and foundations. And we're serving as an outsourced chief investment officer for those families or those institutions. Where we think we're competitive is in that sort of $10 to $100 million range, where it's probably underserved by some of the private banks or large consultants.
Thanks for that overview, Sam. Do you mind giving us and our listeners just a quick overview of the research team, how it's structured, and then maybe some insight into key contacts that across asset classes our listeners could reach out to potentially get a meeting?
So our research team has had some turnover, I would say, in the last couple of years. Tom Chapin was a longtime CIO at Mill Creek. He has since retired. We brought on Michael Crook. He now leads the team. Michael was previously with UBS in New York. It's been a great transition. Tom's been helpful from the sidelines. On top of that, Andrew Murray joined from Morgan Stanley shortly after Michael's arrival. Nora and I have stayed on board through thick and thin. And so we remained kind of small and nimble, but we'll get into it, I'm sure, today. But we don't do a lot in terms of managing a big menu of managers. So it is manageable for a team of 4.
Thanks, Sam. And getting into what that menu looks like and how you utilize different managers, What does the win look like for different investment managers for our listeners to better understand where their strategy goes once it does get approved by that research team, whether it's a select list or models or inside of a Mill Creek proprietary fund?
Yeah, so I would say within the traditional space, we manage, quote unquote model portfolios. Those are guideline portfolios. Obviously, there's a degree of customization going on at the client level, but by and large, our team is managing those models for public equity and traditional fixed income. And then in the alternative space, Mill Creek created a fund of fund structure back in 2008, and we utilized that for hedge funds, private equity, and recently, and 2 years ago, we launched a private credit fund. So those are Mill Creek branded fund of fund structures that it's just a vehicle of access for our clients to use, and it's cost competitive, and we think that's a key advantage of ours.
Hey Sam, just building on that in terms of the internal structures. So you can direct clients into the internal structures. Obviously you said private equity, private credit, and so all for our alternatives listeners. But would you also technically do searches that would preclude the internal structures? You might do a mandate for a buyout fund that doesn't serve what the internal structures serve?
We've tried to shy away from that, Chris, to be candid. We've gone down that path, not necessarily in private equity, but in hedge funds we've done that. We do have a couple large institutions that are big enough to go to some of these managers by themselves. Those are more one-off situations. I think what's most relevant to your group today is that on the private equity side, we now work with Wilshire, and so they are doing a lot of the due diligence, but we are using that fund of fund structure still for allocations. Now, clients come to us all the time with where they're being pitched a manager or a co-investment idea. We have the ability to do some due diligence on those, but they're not Mill Creek recommendations per se.
No, that's good to know. Obviously, co-investment, I'm sure Wilshire's helping you on the co-investments. I will say for listeners, we have a lot of friends that are clients of Mill Creek and extremely happy clients of Mill Creek. So clearly what you're doing with those internal structures fits a portfolio need. Now let's pivot it back to the equity side. Tom Chapin, great guy, comes out of the Vanguard stock, so that's obviously his approach to picking managers passively. Is there a chance to win for a boutique equity manager? Sam, that's your purview at Mill Creek, showing a really unique boutique idea? Or do you tend to really lean on the passive side and consume that fee allocation via alternatives?
Yeah, so there's a couple ways to answer this question, Chris. I would say the vast majority of our public equity exposure is in a passively managed structure, whether it's our ETF portfolio or we have clients using an overlay manager to do tax loss harvesting for taxable clients. That is essentially an index tracking portfolio as well. But with that said, on the institutional side, and for high net worth clients with IRAs or something where there's perhaps some sort of tax blocker, we do use active management, and absolutely our preference there is for boutique managers. Now, we don't make changes a whole lot. We tend to partner up with managers for the long run, and to go back to the earlier point about what's a win, it's getting into that active equity portfolio. We don't allocate to outside managers beyond that, but absolutely, our preference is for boutique managers, particularly because we're using the big bulge bracket firms on the passive side.
Sam, let's go back to those proprietary funds you touched on the alternative side, if you don't mind for a second here. Can you just give our listeners a little bit more color, kind of the style or any sort of theme within the types of managers to build out those fund of funds? Do you look at first time funds, right? If it's multiple vintages, are you re-upping with the same manager? Give us a little bit more color on that.
Yeah, so let's kind of take it one at a time. So I manage the hedge fund, Nora manages the private credit fund, and Andrew's overseeing the private equity funds. So on the hedge fund side, there I would say most of the managers today are bigger, well-known, $500 million to $1 billion plus funds. So we're not doing new managers. We've had mixed results there. I would say also relevant to this call today is that we've more or less abandoned long short equity as an asset class. Far too much beta, not enough downside protection in challenging markets. So I would say most of our hedge fund exposure today is in multi-strategy managers or some sort of arbitrage relative value type of mandate. On the private credit side, Nora's building that vehicle there. It's 10 or 12 funds today, and we're actively allocating to probably a couple more this year, I would think she's going to identify. There, it's evergreen structures, open-end evergreen structures. The managers tend to have lower leverage, and we're really targeting a high single-digit return in those funds. So we've avoided the big opportunistic funds, or not the big, but the opportunistic funds that are chasing higher returns. And then in the private equity side, a pivot away. Since Andrew joined, we've really gone back to sort of classic private equity in that we are allocating to venture growth and buyout in that fund. Historically, we've made allocations to debt and real assets inside our private equity structure. We are not doing that in the latest vintage, which Andrew will be very active allocating to managers this year. Our clients have made their commitments to that fund, and now it's our job to get those get that capital committed to the outside managers. But in terms of funds there, to answer your question, we are using some funds that we are familiar with and have allocated to in the past. Andrew has a long history at Morgan Stanley, so he knows some funds. And then obviously Wilshire, as I mentioned, they're bringing us ideas, but we can take them ideas. So it's been a good relationship thus far, and we'll see where it goes.
No, that's great. I mean, obviously, a lot of thought with a very small, nimble team, easy for a salesperson to navigate. And by the way, I will say, for those that don't know Mill Creek, extremely friendly folks, very approachable, and it's a salesperson's dream. Anna?
Yeah, Sam, one thing that's very topical is ESG and DEI, and I think for our listeners, it's important for them to understand how firms like yours think about those things, especially given your client base. So can you just talk about how your client base thinks about those things and how your research team in turn thinks about those things?
Sure. Yeah. So our research team is really driven by, we do have an opinion of what clients should allocate to, but a lot of it can be inbound, coming directly from clients or prospects. So on the high net worth side, defining ESG has always been a challenge for us. Sort of creating that model portfolio has been a challenge for us. We don't have anybody today in a ESG model portfolio. We are using that overlay manager if clients want to exclude certain sectors or securities. So that's, I guess, more like SRI than ESG per se. But this whole notion of ESG impact, was hot a couple of years ago. There were definitely some clients poking around on it. And we were looking at structures and doing things, but never really got legs. On the institutional side, much of the same, but I would say there obviously the questions that we get revolve around DEI. Are we vetting our managers and looking at their DEI policies and things like that? So it is topical, it is front of mind, but we're not altering our asset allocation or manager selection process based on ESG or DEI at this point.
Now, it's good to know. Obviously, everybody has their checkmark questions when to ask meeting somebody in ESG and impact. Definitely come in, but that's a great answer. So everybody, there's the stock answer from Mill Creek. So need to move on to another question. Tim.
Sam, you touched on it at the very top of this call, issues and things that you all are thinking about in this current environment. Right, whether it's the banking issues we saw or continue to see over the past few weeks, right? Inflation rates. Give us insight into your investment committee meetings, what you all are thinking about positioning portfolios given the current environment.
Yeah, we just did our quarterly update with clients yesterday. Michael Crook was on a webinar on a similar format here. We're in the camp that we're in a higher for longer type of rate environment. Inflation's been sticky here at kind of the 6% range, well above the Fed's target. We do believe that there will be some recession at some point. The depths of that, whether it's mild or a hard landing, we're sort of unwilling to make a call. But I would say in terms of current positioning, I would describe us, relative to our history as being quite defensive. We've leaned into value securities here and some defensive securities. On the equity side, we're, favoring, high quality balance sheet strength type of companies. On the public equity side and the fixed income side, it's, been relatively conservative as well. We're staying away from, not totally away from spread product, but certainly not chasing high yield here as spreads have come in and are pretty tight, and we don't see that as all that attractive. And, we're really just continuing to push our alternative program. We think it's competitive from both a structure and potential performance. And we think that we're in an environment here for the intermediate term where, returns are going to be middling. What people were getting a couple of years ago on a balanced portfolio, cut that number in half or maybe, some percentage of that over the next couple of years. And so alternatives will play a role in helping clients meet their needs, their spending needs and whatnot. So, hopefully we'll see our alternatives program grow over the coming years, hedge funds, private credit and private equity.
It's music to the ears of a lot of listeners because we know a lot of people that use Marketplace are alternative managers really trying to penetrate the advisory channel. And the high-end advisor that Mill Creek is just really validates that thesis. Sam, usually a talk on searches, and you gave a pretty good overview of what you're thinking about. So let's pivot the question a little bit differently. And this is based on an assumption that I have, but from some, more than a few data points. While there may not be a lot going on right now, because you just mentioned you're waiting for a credit widening event, you're waiting for maybe a little bit more chaos coming with whether it's a recession or something. But we're finding, that we said at the top of the call, that people are taking meetings. Do you think that you and your colleagues are taking meetings, looking at managers, identifying really interesting opportunities that may be interesting in a couple of quarters? So right now there might not be anything to act on. Obviously, you said Andrew's got money to put to work, but is it just it makes sense for a sales professional with an interesting idea to reach out to you? Nothing might happen imminently, but stand by based on the macro forces might make ideas pretty intriguing over the next few months.
Yeah, so Andrew is definitely actively allocating. I do think Nora will add a manager or two this year, so she's taking lots of meetings. The private credit area is getting sort of frothy, and there's a lot of money flying around in that space. So we're trying to be super careful there. The traditional side, we probably won't be. I wouldn't expect any changes, with manager changes for the rest of this year. But yeah, I would say, to be fair, we're open to meetings all the time, and whether they're in the office or out of the office. At this point, we're always open to taking meetings, but they can be an introductory meeting. They could go quickly into, if there's a need that arises, we can be fairly nimble relative to some of the other groups out there. So I've certainly seen an idea, from a meeting go to investment committee within a month's time frame. So we do like to be in the know. We do have our finger on the pulse, we feel like, in terms of what managers are out there, but we're always willing to meet with new managers. But know that it's not a slam dunk to get on our platform, because we have those models in place, and we look for long-term partnerships.
No, great, Sam. Obviously, for those that know where Sam resides in Conshohocken, where his office is, chock full of high-end advisory firms. So Mill Creek, if you can get a meeting, put it on the roster, as well as our friends at Cerity and some other folks at Forbes Family Office. Go a little bit further out, you see Zeke. But Philadelphia and the suburbs is full of great, interesting managers, provocative managers like Mill Creek. I mean, Sam, we've known you for a long time. You've been a great friend. I mean, gosh, not too long ago, you're under $1 billion, now pushing $10 billion. Congratulations on all the success. As we said, we'd filmed this after, because of technical difficulties. At the back end of our call, we had Sam on the phone at 10:45, and here it is pushing 12:15, and it just shows you the kind of guy he is. Your patience is very appreciated, Sam, and we look forward to crossing paths soon. I can't thank you enough for just sticking around and letting us work out the technical difficulties. It was worth it to hear your insights.
Absolutely, Chris. Anytime. Thanks for having me on today.
Oh, good. We'll talk to you soon. Take care.
Take care.
We hope you enjoyed that interesting interview. You can find this episode and past episodes on Spotify, Apple, Google, or your favorite podcast platform. We are also available on YouTube if you prefer to watch while you listen. If you would like to catch up on past episodes, check out our website at dakota.com. Finally, if you like what you're hearing and seeing, please be sure to like, follow, and share these episodes. We welcome your feedback as well. Thank you for investing your time with Dakota.
Don't say goodbye.